If you look at the Newmonts, the VRICs, they're all lagging behind. If I look at the GDX, that's at 35%, 36%. Usually they massively outperform gold, and gold is up 30% for the year. So if you believe that usually there's a 3-to-1 lever on the stocks to the gold price, the market has provided you proof of concept. If you were uncertain to enter the miners, now seems to be the perfect time. Gold is high, margins are expanding. We're only a couple weeks away from getting first production results for Q3. Financials are going to follow 5-6 weeks later. That if that doesn't convince you that the miners will be printing cash or are printing cash right now, then I can't help you.
Hello and welcome to the VRIC Media channel, where our mission is to educate you on how to make money in the natural resource sector. I'm your host, Ted Butler, and today I'm very glad to be joined by one of the most recognizable faces and respected figures in the junior mining industry, Kai Hoffman. Kai's the organizer behind the Deutsche Goldmesse conference in Frankfurt. He hosts his own show on the YouTube channel Soar Financially, and he's also the owner of Uranium.com, North America's leading provider of relevant finance information in the junior commodity space. Kai, it's a pleasure to be speaking with you today. Thanks for coming on the show.
That was awfully nice. Thank you so much for introducing me like that. I really appreciate it, and it's glad to be here. I'm glad to be here.
No problem. You deserve it. So first of all, I want to get into Beaver Creek, which we both attended. It was great to see you there. I'd like to start by reading what you posted after the conference on LinkedIn, as I think it's quite an apt place to start. So you said, after 30 tough months in junior mining since the Fed's first rate hike in March 2022, we finally hit the fifth stage of grief, acceptance. Not a single CEO or investor at the Precious Metals Summit in Beaver Creek complained about the markets during my meetings yesterday. So it would be great if you just elaborate on that to get us started.
Yeah, it was really good temperature check in Beaver Creek. It's a premier conference. It's really, really well organized. It's just a pleasure to be there. Early fall. I think we were there a week too early because the leaves haven't started changing yet. Because once the leaves on the pine trees or whatever, no, it's not pine trees. I forgot what they're called, but once they change yellow, it's absolutely stunning out there in Beaver Creek. But one thing that surprised me the most, and that's what I put out in the tweet and in the LinkedIn post, is that the mood was great. I wouldn't say it wasn't euphoric, don't get me wrong, but it was a very positive mood. I didn't attend the last couple of years due to personal conflict, but as I said in the tweet, nobody complained. And up until May, when we hosted our conference, I actually stood on stage and mentioned this has to be the bottom. It feels absolutely miserable. Everybody was complaining. Companies were out of money. Nothing was happening. Right? It was pretty much a dead market at that time. And it didn't feel like that at all in Beaver Creek. I met with a lot of companies that had like 30 million market cap and $10 million in hard cash, which is phenomenal. Right? So nobody complained. Nobody complained about the market situation. Of course, $2,600 gold helps. But stocks started to slowly move as well. Like, we're far from a euphoric stage. We're far from anywhere near a top in the mining stocks, but the mood was really positive. And that sort of transpired over the last 2 weeks in the markets, I think, because it has picked up. We've seen that in financings. It's starting to trickle down a little bit. Even smaller companies are able to raise a bit of money here, which is a really positive signal. And we'll see if that continues.
Yeah, absolutely. I do want to get into the financing, definitely, but just staying with the sentiment, I'm curious to know how that compares to previous conferences. You know, have you ever seen it this optimistic? I know you're saying it's not euphoric, but it's certainly a crucial turning point. We're at this precipice of what feels like a bull market. I mean, certainly the gold price is leading that way, but how does the sentiment compare to previous conferences is what I'm trying to get at.
It was better, way better. The last 2 years were absolutely a horror show, quite honestly. Like a dead man walking. Like, I've seen photos from the Denver Gold Show, for example. You could throw a bowling ball down the hall and you wouldn't hit anybody, right? Zero interest from the investors. Companies were struggling. They had to cancel attendance. I think Beaver Creek had record attendance this time, like 220 plus companies, which is absolutely insane. But that tells you a lot, right? And as I said, a lot of companies were able to raise money. They have been able to attend. One thing I've noticed as well, we've seen a lot more attendees in general, meaning companies brought more people out, which means they're doing better, right? Usually when the market is dire, it's just one person, maybe two at best. Maybe they bring a geologist out, and even that for this type of conference is a big question mark, because you're not having technical discussions in a 20-minute meeting, right? But that's something to follow up on. But that said, like, yes, it was optimistic. We look at the major indices here for the miners, like the GDX, GDXJ, we're about a 30% higher year to date, which is great because some of those stocks have really, really outperformed. And IM Gold, for example, is up over 100%, just to pick one, while the GDX and GDXJ are up about 30. And I wrote it down like 35 and 36%, which is fantastic performance. Because if you compare it like to the S&P 500, which is up 20%, still not a meager return, right? But we're finally outperforming. Is it enough to jump into the miners yet and take on that extra risk? I think we're getting there. I think we're getting there because some of the big money needs to move and might have to invest into the junior or into the mining stocks to show positive returns in the future.
Absolutely. And another good sign that I noticed at Beaver Creek was the presence of so many corporates and investment banks. It's almost like they're sniffing the opportunity. And I guess the next stage would be the generalists to come in. But yeah, another sign that I wanted to talk about was obviously something that's you're an expert in, with the Uranium index. And obviously, it's a more quantitative means of measuring activity in the junior mining sectors. But I think it would be great for our new listeners, perhaps, if you could provide a summary of what this index actually tracks and how it works. And then beyond that, it'd be great if you could interpret it and tell us what it's telling you about the junior miners in this moment.
Yeah, absolutely. No, my pleasure. So Orin Inc. I bought in September 2016, and we've been tracking junior mining financings on the TSX, TSXV, and CSE since 2011, right? And once a week, we publish the Orin Inc. Index, which is sort of like an industry benchmark for us, but we benchmarked at the 100 level back in January 2011. And that was the absolute height of the market. It was absolute euphoria out there. So when we look at the Ornick index, I don't think we've reached 100 many times since I've bought it, quite honestly. Like we've had a couple weeks here and there where the index spiked up, but it's not for a prolonged period of time. And what it really tells me is like how well is the market doing? And the financing aspect is really, really important. And one thing we closely look at is how involved are the brokers? And they've come back to the table over the last 18, almost 24 months. Because they've been financing larger companies like the later stage explorers, the developers. They've been attracting most of the capital. Grassroots companies that are just starting maybe to raise money for a first drill campaign ever on a project are struggling. Oftentimes, those management teams don't have a track record. They might not have the network, so they're struggling. I'm not saying they're bad management teams, but they're just struggling. It's just really, really difficult for them to raise money on a new idea. There's not enough risk capital out there. And you brought up the LinkedIn tweet, and we've seen that risk capital evaporate pretty much I think it was March 18th or so in 2022, when the Fed announced their first rate hike. That risk capital completely disappeared. Yes, we were still able to raise money. We've actually raised a lot of money for the sector. And Rick Rule has been running around the conference circuit the last few weeks here. It's been telling everybody that the sector is overfunded. I wouldn't go as far, but I think there are too many companies that are attracting capital, right? And that maybe shouldn't happen. So overfunding, yes, maybe it's flowing in the wrong companies, right? There is enough money around up to until now, like September 12th numbers, we raised about $2.7 billion within our coverage universe. Keep in mind, we only look at financings up to 100 million Canadian dollars, and we don't look at companies that have a bigger market cap than 1.5 billion. We really focus on the junior end here. But that's in comparison, yes, it seems like we're down because last year we raised $4.4 billion, if I'm not mistaken. I have to look up the exact number. So it feels like we're tracking behind the average a little bit. I don't think we'll reach the full 4.4 by the end of this year, although the market seems to be ticking up. I just mentioned to you before hitting the record button, it feels like sentiment's improving. Companies are being able to raise money quick, and they're oversubscribing financings again. So we'll see where that takes us. We haven't really seen a flow-through season yet. That also means like maybe people will have to take some gains off the table, buy some flow-throughs, usually not the best shareholders to have if they only come in for a tax advantage. So you might want to be careful with that. But we haven't seen the full impact there yet. There were some regulatory changes in Canada as well. So I'm not sure if we're going to see the full 100% impact like we usually do at the end of the year when people start to think about doing their tax returns and are looking at their balance sheet at home. It's like, oh, I've got some gains here. Let's buy some flow-through and try to offset that, right? So my estimate, if you were to put me on the spot, I think we'll get close to $3.9 billion, which is phenomenal. We might actually get to the 4.4, depending on sentiment. And what is it now? It's the end of September 26th when we were recording this. So we got 3 more months. We got 1 more quarter. And I think we're on track to at least get in the last year. And the beginning of the year, or up until, what was it, mid-August, when it was really apparent that the Fed was going to cut rates and gold really started to take off. the sentiment was just abysmal. And but I think it's catching up.
Absolutely. And one of the things that we've been quite vocal about on this channel is the generational opportunity that's presented by this with the juniors. Being so unloved and unappreciated for so long, but now we've got this high gold price leading the way. There's finally some optimism starting to come back in. I mean, one of the questions I'm curious to get your thoughts on is, at what point does the generalist start to take a look at junior miners? Are you seeing any evidence of that? I know it's not really tracked in the index, but with the conversations that you've been having with all the people that you interview, what would your thoughts be on that, on the generalist?
Well, the tide lifts all boats, right? And one thing I look at is like, I have to read for my job mainstream media. So I have to go to the Bloombergs, the Financial Times, the CNBCs to see what they're talking about. And yesterday, gold reached a new all-time high. You couldn't find a headline. There wasn't a single article about it on CNBC, for example. So I think we're far from the generalists coming into the market. I'm not sure if that is like wanted by certain people, that we don't attract the generalists right now into the gold space. Because even if you look at ETF buying, yes, it has been positive in August. Finally, across all three regions, US or North America, Europe, and Asia, finally all three regions are in the green. But the US has been selling for the longest time. Europe has been selling for the longest time into a rising gold price environment. So the generalists are not really at the table yet. We haven't seen, as I said, euphoria. We're far from euphoria, despite trading at $2,700 gold today. And I haven't checked today's CNBC yet to see if there's if there's a headline. But yesterday there wasn't, right? Yeah. And I think that's everything you need to know. We're far from euphoria in the mining stocks. Yes, some of the bigger companies have run. They're performing. Agnico Eagle's trading near all-time high levels. They've just announced a massive buyout offer, or they didn't actually. Somebody else published that they made an offer for De Grey Mining, a $3.2 billion miner out of Australia. I haven't looked at all the details, but they seem to be smart about using their high valuation right now and turn that into more assets and trying to underline what they got. I think one of the best miners out there by far. But if you look at the Newmonts, the Barricks, they're all lagging behind. If I look at the GDX, I said 35%, 36%. Usually they massively outperform gold, and gold is up 30% for the year. So if you believe that usually there's a 3-to-1 lever on the stocks to the gold price, you've just seen the proof. Like what else do you need? Proof of concept is the term I'm looking for.
Yeah.
The market has provided you proof of concept. If you were uncertain to enter the miners, now seems to be the perfect time. Gold is high, margins are expanding. We're only a couple weeks away from getting first production results for Q3. Financials are going to follow 5-6 weeks later. That if that doesn't convince you that the miners will be printing cash or are printing cash right now, then I can't help you, right? The Dow is up 11%, NASDAQ 22%. We're massively outperforming and nobody's talking about it.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
I think as well, on the generalist topic, I think we maybe get too fascinated with the idea, but the moment that they enter the space is perhaps the end of that's the time we should pull out, That's the point at which the irrational exuberance sets in. So perhaps it's a great sign that we're not seeing the generalists that getting involved yet, as you say.
For us, let's pretend and let's use the term smart money loosely here, but of course it's perfect. Like I've been invested for a long time in the miners, so like I don't pretend that I just entered the market because I saw an opportunity here. Like I've been in it for a long time, right? But the Fed rate cutting cycle offers a lot of opportunity, and we will probably see a lot of money moving to the sector because it's looking for returns. A lot of the money is sitting in money market funds, and if the bond yields are coming down, we're sitting at 3.75% roughly for the 10-year. If that is coming down, people will need to see returns. Like inflation rate is at 2.9%. So are you really willing to let inflation eat up your gains, even if you're just sitting on that coupon there. That's the margin of 0.8%. And we all know that real inflation is not the real CPI number, or the CPI number doesn't reflect real inflation that everybody sees and feels, right? So if you want returns, you got to find a sector that is performing and will be performing for the next 12, 24, maybe 36 months. I have no idea how long that cycle is going to last. If I look at the macro dynamics for gold, this cycle should last easily 3 to 5 years. But what do I know, right? Geopolitics is a big item. The BRICS, there's a meeting coming up at the end of October that some suggest maybe there's a BRICS currency going to be announced that might be gold backed. We've heard that narrative before. So check your news agencies and check the sources of that, and to make sure that you agree with that. But there's so much momentum in the gold space right now. Maybe technically we're a little overbought in gold right now, so don't hate me for saying that in the comments down below. But it is healthy to correct a little bit, because that just shows how strong this bull market is. And I think it was Ronnie Stöfele who said, or I've asked Ronnie Stöfele in one of my interviews, Ronnie, is now the time to buy the dip? Right, we've said that in the main markets before, and we've said it for like Nvidia and other stocks. I feel like now is the time to buy the dip. When gold dips, you buy it.
Correct. Yeah, and you just mentioned Nvidia. Then I was going to ask you about the tech stocks and this rotation of capital. Do you think there needs to be a rotation of capital away from the tech stocks for the gold price to continue to rise, or can they are they kind of mutually exclusive?
I think they're mutually exclusive to a degree. There's so much money sitting in the money market funds. I think the last number I heard was like $5 trillion or something like that, just sitting there. If we get a small percentage of that, I'm happy with it. That'll move the markets like you would not believe. Like we're such a small sector. If you throw all the mining companies combined, we're not even half worth what Apple is worth. I believe it's way less than that, right? I don't have the exact number in front of me, but you can do the math, and there's enough charts on Twitter or on X floating around that show you how undervalued this sector is in comparison. And even if we only get back to like historic norms when mining stocks were in the S&P 500, we get back to that, I think it was 10% level, then we're off to the races. That sounds like absolute euphoria, and I'm trying to make a massive bull case here, but it just shows like how ignored this sector has been. Newmont was one of the worst performers in the S&P 500 for the last 6 months, or for the first 6 months of the year. I looked it up; it was like ranked 480th or something in there in performance-wise for the first 6 months, despite record high gold prices. But they couldn't show the market that margins have been improving at the time, because all-in sustaining costs are still, or have moved up for Newmont, as like many others as well, $1,500 roughly, which is a chunk of money for just an ounce of gold. But now we're trading at $2,700. That means $1,200 margin, roughly. That's a lot of money, and I haven't seen that in my career, right? So yeah, that's the opportunity.
Right. Yeah, and obviously we've got to talk about the gold price a bit more in detail, given the unbelievable run that it's been on. I mean, in my country, the UK, we just hit £2,000 gold for the first time. I know you speak to a lot of experts about the future of the gold price, and of course you're an expert in your own right, but I'm curious to know where you think gold is headed for the rest of this year. You mentioned potentially a correction, and I guess beyond that as well, your thoughts on the macro situation and conditions that will characterize the rest of this year too. I mean, do you think the Fed's going to, continue to ease rates, or do you think it'll actually go, I need to, Jerome Powell might stop and just suddenly park rates where they are, in which case, what happens to gold?
Yeah, if that happens to gold, of course, it will crash back down to $2,300 quickly, right? Do you believe that? I don't. So no. He's already said we're going to cut another 50 basis points, whether that's at the next meeting or the one after, or if it's 25 and 25. It doesn't really matter. That the message is out. Fed Watch says about 58%, 60%, 50-point basis cut right after the U.S. election, which is interesting because that's another interesting factor if that's coming down the pipeline here. But Gold is set up for a stronger rally. Technically, I think we're a little overbought. I had Gareth Soloway on my channel yesterday, and he explained it. He was looking at the logarithmic daily candles, drew a nice line from, I don't know, back in the 1980s till today, and we're just touching on that line. If you connect all the highs at one point, we're just touching on that line. So he expects a bit of a pullback to 25, which personally, again, I don't have a problem with it. I think it's healthy that the market corrects a little bit. It's not, nothing is healthy if it goes up in a straight line. Trust me, it cannot be healthy because it will crash way harder than you want it to. And if you want a sustained rally, you need small corrections, right? You mentioned so many factors that are like hammering on the gold price, Fed rate cutting cycle, but also the weakness of the dollar. We're only trading at about 100 for the Dixie, 100.5. It looks like the chart wants to break down. It's tested the 100 level a few times from the top, trying to go down. I'm not a technical analyst. I'm just looking. Those are just observations from my end. But we've seen gold break out after it touched on that, what was it, 2080 mark, I think, 4 times. Yeah. And I'm seeing the same thing now happening with the Dixie, that it's touching on the 100 point mark, the 3rd time, I think, now on the way down. And if that happens, we'll quickly see 95, maybe even 90, depends on some of the other macro factors and how bad or how the economy in the US is performing. According to Jerome Powell, everything is hunky-dory. You don't have to worry about anything. Inflation is tamed. Unemployment is in check. But do you believe that? I don't. And just looking around, just you can tell there nothing is in order. And unemployment just doesn't stop because you cut by 50 basis points. Yes, we've seen a jump in mortgage rate applications. That was an 11% week-over-week jump. Whoopity-doo. I think that was to be expected, right? But existing home sales are down. New home sales didn't perform as well. So I think there's a long way to go for the U.S. economy to recover. Is it going to be a massive hard landing? The U.S. might get away with one. I mentioned that before on my channel, but there's going to be correction. And if you look at the U.S. debt situation, if that doesn't worry you of $35 trillion, then I'm not sure what will. But that's a problem that needs to be solved. None of the U.S. presidential candidates is addressing it. So what is the solution? I think we will be kicking the can down the road. And I was interviewed the other day, and I was asked, "Hi, what's your biggest worry? What's your biggest concern?" My biggest concern is that, yes, I'm sitting here telling you the market is going to correct, but it might not happen for the next 10 years because we're just kicking the can down the road. And that's my biggest fear. Like, I've been expecting a massive market correction for the last 10 years because we've been printing money. The government has been intervening in the free market like you would not believe. I think it was Harry Dent that said that $27 trillion were pumped into the market the last, since 2012, 2013. So that's 10, 11 years, 12 years maybe. That's impossible. That's a massive market intervention, and all the things that you and I learn about in school don't apply.
No,
it don't. Right. So that's what's weighing on gold. And that's why gold is up. And there you can throw in central bank buying in the East. I mentioned the BRICS currency. Maybe that's a factor, but the US weaponized the US dollars. So I would blame them. It's their fault for doing that, because now countries are seeking security by maybe bringing some gold home. Saudi Arabia apparently just bought 160 tons of gold in Switzerland, having that delivered back home. So everything's moving east, and seems like there's a bit of a shift happening, but it was all self-inflicted, right, to a degree. And we'll see how we can pay the piper here, if we have to pay the piper, and when do we pay the piper, right? The suffering might be prolonged. We're kicking the can down the road. Look at Japan, debt to or GDP to debt ratio, not GDP. It's 255%.
Yeah,
debt to GDP ratio. Sorry, that's the is 255%. The US is at 122. So we got a long way to go. The U.S. can really go absolutely ballistic printing money and maybe hopefully using that money for the right reasons, maybe fixing infrastructure and some of that interstate network. And I see them spend money at least on airports by traveling around. So that's good. I'm sure you've flown through Denver. So there's stuff happening, like the lounges, the airlines are investing. So there's a bit of optimism there. But wow, that was a long answer, Ted. I apologize for that.
No, but covered a lot.
All the signs are pointing up for gold. The only thing I haven't figured out yet, because we've been talking about gold and high gold prices on our channel for the last 4 years, pretty much. And when we said we'll break through $2,000, the US is going to be burning. And that hasn't happened yet. Is it burning? No, we're kicking the can down the road. And I think that was more, looking back now, people expected much worse in the US, given a $2,000 gold price. So if things get much worse, where's gold going to be?
Yeah, and absolutely, you make really great points. I think as well, you touch on the US presidential election. I don't want to get too swamped in the political circus that is the US politics, but I kind of want to know what you think, how you think the gold price would respond to different outcomes. You know, whether we get Trump or Kamala Harris. Like, do you think it matters, or do you think it'll still be the same old, government debt printing, money printing, debt accumulation, and further debasement of currency.
I think if Harris wins, nothing will change.
Yeah.
With Trump, at least there might be a chance of change, but I don't even know what
Yeah.
that looks like, quite honestly. I haven't read the Trump policies for the economy that came out earlier this week, I believe. So I need to read up on that. It was going to be my weekend reading. But quite honestly, I don't think much will change. I think the wheels are set in motion. I feel a bit sorry for the next US president. Trump's got 4 years because I don't think he can get reelected. I might be wrong, so correct me in the comments down below.
No, you're right.
I'll definitely read it. But Harris has 8 years to fix it, but she'll need the first 4 years just to catch that falling knife and maybe make the bleeding stop and put a Band-Aid on it. Right. And then maybe the second 4 years, she'll be the best president the U.S. has ever had because we're coming out of massive, maybe the U.S. will be in recovery mode. Right. Somebody mentioned on my channel the other day, and I love to quote that, like Bill Clinton had the easiest job. He couldn't even screw it up. Right. Back in the day, I think he was president in the late 90s. So he had the easiest job ever. I think Kamala, maybe in the second part of her term, if she gets reelected and all that, or maybe towards the end of her term, she's got the easiest job ever. So. We'll see, but that's just me as a German looking in. I don't dare make any predictions and criticize the U.S. presidential election system. That's for the Americans to figure out. But we'll leave it at that.
Okay. Moving on from politics, then I definitely want to get your thoughts on silver. I've written extensively about silver and how it's kind of straddling between these two, industrial and the monetary side of things. Some people are even saying the industrial is completely taken over. That's not the case. It still does have that monetary correlation with gold. And we're starting to see that now. We're starting to see that with just over $32. $32.50 is a very crucial level. Based on what you said with your base case, how do you think that silver's going to fare for the rest of this year and into 2025?
I'm glad you brought it up. Silver seems to be behaving like an industrial metal, so I don't get alone crucified here in the comments, right?
Yeah.
But silver has been behaving like it. If you look at the copper price in tandem, it has been moving almost in sync. But look at the last few days once the Chinese stimulus package was announced. Copper shot up, silver shot up. It's the same candles, right? Silver is a much smaller market, of course, so there might be other factors at play. But for now, it has been behaving like an industrial metal. Sad to say it hasn't behaved like gold. Gold is in a market of its own. It's doing it's doing its own things. Like gold is gold is up 30%. Silver has been outperforming gold, which is good, but not by what we're used to, right? And silver is still a long way away from its high, like $50. We all know that. We're still trading 40% lower. So I love silver. I think silver is going to catch up, and it will catch up once we break through 32.50. We hopefully should see that rally. We've touched on it a few times now. I haven't counted all the touch points, but gold, it took 4 tries to break out. Silver will probably take just as long. And if silver really reconnects with its big brother gold and is seen as a precious metal again and trades like a precious metal, then we're off to the races. Then I have no price target for you, quite honestly, because silver often over-exaggerates anyway. So if we hit the 32.50, we'll probably quickly run up to 40 because that sort of correlates, because the gold-silver ratio is at 85 right now. Silver has a lot of catching up to do. If we just go back to 75 and gold doesn't come down, silver has a long way to go. Right. Yeah. So that's very simple. And I'm quite bullish on silver. Don't get me wrong. Like, I understand the industrial uses. It's even in my deodorant at home, but it has room to grow, and it hasn't been treated as a precious metal by the traders, apparently.
Yeah. So that's interesting. So would you say that the monetary aspect of silver is no longer relevant, or do you still think there is some weight to the silver price that is influenced by gold?
I think you'll need way too much silver to make it relevant again. Right. And I don't think we have enough silver to make silver relevant again, which is a problem. Also, central banks are buying gold, not silver. It's easier. It's much bigger. You have to move much less for way more value. So there's a reason behind that. Maybe JP Morgan has all the silver in its vaults, right? Maybe to help manipulate the market. That's for other people to figure out and decide. But gold has all the attractions of the monetary metal. Silver hasn't been used as much like that. It hasn't been like that in a while. It is still valid. Don't get me wrong. I'm not trying to dismiss silver here as a monetary metal or anything. It's easier to buy. It's cheaper perceived on paper. It's not costing you $2,700 an ounce plus a premium to buy an ounce. It costs you $32 plus a premium. If you buy from some of the miners directly, you might get a discount, but it's not monetary value, right? at this point. Like you can't use that. Those are not pneumatic coin or numismatic coins. Is that the right term? Probably not my
I know.
yeah, not my field of expertise here, but it's cheaper. It seems a lot cheaper on paper. It's perceived cheaper, and so yeah, that's my 2 cents on silver here.
Right. Yeah, no, I take your point absolutely, and I don't want to get into a philosophical debate about whether silver is a monetary metal or not. Whatever exploits the ongoing supply shortage, it doesn't matter where the demand comes from, does it really? We've
Exactly.
had 4 or 5 consecutive years now of structural deficits, and that can only go on for so long. So anyway, moving on from silver, we're obviously both still optimistic on it. I do want to ask you about copper, which is the industrial metal. Dr. Copper often telling us about economic weakness before it even happens. What are your thoughts on the recent price rise, and maybe what are your thoughts on copper miners as well, as an extension to that?
Yeah, copper is an interesting one. Long term, I'm extremely bullish on copper. Don't get me wrong. Like I think it's going to be the best performing metal over the next 10 years, right? Gold is not going to double, but copper easily has that potential, right? If gold doubles, then we have a whole different set of problems I mentioned earlier. But if copper doubles, that's just a reflection of the lack of supply over the next 10 years. It doesn't have to do anything else, really, right? So we'll table the miner discussion or come to the miners in a second. But if you look at copper in general, copper is a great indicator. You mentioned it, and I almost lost my point here, but it really depends on what camp you're in, whether the U.S. and the global economy is going into recession. It really depends on what news outlet you read, right? One thing I've noticed though lately is that the media, the financial mainstream media, is sprinkling in words like prolonged downturn and soft landing. I've been hearing more. Right. The other day, I read that luxury goods stocks have been selling off in preparation of a prolonged downturn. So are we in a recession or are we not in a recession, right? So if you believe in a recession, then copper might take a breather. I personally think that copper's overreacting to what's happening in China. I could be completely wrong. If China throws even more money at the problem, we'll probably see $5 copper faster than you can say copper, right? But it will happen, right? That's a wild card, tough to gauge. I'm a little worried that it's just I think it's a bear flag, that it's just a trap for now, that copper will come back. It's overreacting to the news out of China. I've been hearing calls for more stimulus. If that happens, if more money flows in, maybe infrastructure projects or so, then copper could run, but not on the basis that we've all expected it to run on. Right? We're reading about the electrification trends. EV sales are slowing down. Everything's taking longer, which is great, actually, because we need to catch up on the supply side. And that brings me a bit to the miners. We need a lot more new copper mines to satisfy any type of demand growth. It doesn't really matter where it comes from. It doesn't matter if it's from the cars, from reinstalling, reconfiguring the US power grid, or even China building more infrastructure as well. It doesn't really matter because we don't have enough. It's pretty simple. It doesn't matter what analyst you want to believe. We're running into a massive deficit on copper. We haven't put a new pure play copper mine into production in the longest time. I don't have the exact year in front of me, but that hasn't happened. BHP just bought Filo after they couldn't buy another fellow miner to ramp up copper. No, not even ramp up. Sorry, just to add copper production to the portfolio. And it had nothing to do with ramping up. Now they're buying development projects that will take 10, 15 years to go into production. So they're extremely bullish on copper, obviously, in the long term. A lot of the gold miners trying to add copper to the mix, which is not really good for their equity stories, but they're wanting to diversify away from gold a little bit, which I can understand, but they shouldn't, in my opinion. But they're trying to add copper. Barrick Gold is building Reko there in Pakistan, highly controversial project, but it's going to be a massive gold copper mine. And copper here is that word that Barrick is going for, right? I've asked Mark Bristow about it 2 years ago now at one of the conferences in London. Is like, are you going to change the name to Barrick Gold and Copper? And he laughed that away. Maybe it's just going to be Barrick from now on, right? But you have to think about those things, and that's why I like copper long term, easy to forecast. Probably I hate the term no-brainer, but if you believe in the electrification and if you drive an EV, then you should own some copper in your portfolio.
Right. And it's much less complicated, much more of a pure play compared to something like silver, which is more nuanced and often more of a difficult trade. It's very honest in what copper is. Okay, so staying with the kind of quick fire commodities round, I want to get your thoughts on uranium. That's obviously been one of the favorite commodities in the last couple of years. Spot price was $105 back in January. It's now kind of consolidated in the $87 to $80 range, about $80 per pound now. What do you think the future says for uranium, given your base case that you outlined earlier?
Uranium is an interesting one because I admit it. I've said it on other channels before. Like, I don't understand where the supply really comes from. Yes, I can look at a Cameco, I can look at a Kazatomprom, and understand where some of the supply comes from. But I don't understand where Sprott ETF can buy a gazillion pounds of uranium, and the price doesn't really move, right?
Right.
So for me, the market doesn't make a whole lot of sense. At some point, the supply will dry up, perfect, and I'm happy to be late, right? Fundamentally, uranium is phenomenal. Like, I'm sitting here in Germany, I'm scratching my head while we shut off our nuclear reactors. Quite frankly, I look at the CO2 emissions per kilowatt or gigawatt hour produced, and France is blowing us out of the water. I think France is producing it at about 18. It's either 18 grams or 18 kilograms per kilowatt or gigawatt hour. It doesn't really matter because ours is 520 because we use 42% coal. Think about that. It's absolutely ridiculous. It's mind-blowing. In the US, they're restarting reactors to power the AI revolution, and Microsoft needs it for its computer centers and data centers to run off of clean, efficient energy. There's no way around it right now, unless we come up with fusion or some other new technology you can sometimes read about in mainstream media that's 15, 20, 30 years away from commercial production or uses. Then there's no way around uranium. You need it for baseload energy, and the market is just very small. Also, uranium is being highly politicized right now. A lot of restrictions on Russian processed uranium, which the US needs for its reactors, which is really interesting because I had to laugh the other day just because I read an article that, of course, the US sanctions imports from Russia, but not from China. So from 2020 to 22, apparently there was no imports of uranium from China. And all of a sudden, guess what happened in 2022? The US starts importing uranium from China. So somebody must have found a way to ship it, in a nice loop back to the US. It's a bit mind-boggling. It is highly politicized. The US needs some refining. I think they have a very little refining capacity, so they could probably help themselves for a little bit, but it's definitely not enough to fill any needs. We've seen a contract cycle push prices higher, but they've come down. So we're in a waiting period. And I think uranium is going to do well. Don't get me wrong. The uranium price, to answer your question, is going to do well. I don't really have a price forecast. I think it will drastically move and aggressively move higher once that supply dries up. But I can't gauge where that is coming from. So I don't really have a forecast when that is going to happen.
Okay, fair enough. Another metal, last one I want to ask you about, platinum and palladium, if you want to. I'm always guided by what Rick Rule says, where, always go where the unloved commodities are first, and platinum and palladium are so unloved right now, partly because of the green energy transition. But I'm starting to wonder if with the supply constraints in South Africa, given that about 70%, if not more, production platinum comes from South Africa, if the green energy transition doesn't progress as quickly as people expect it to, could there still be a demand for internal combustion engine cars? And could there be a case for platinum in the sense that the market's not valuing it? What are your thoughts on that?
I'm not an absolute expert. I don't even know the exact prices for each metal right now. But if you believe, and have you seen the numbers, EV sales are slowing down. Combustion engine vehicles will not disappear from the road by 2030. Trust me, they won't. If you believe that, then I think you do have a bull case, and I tend to agree with Rick Rule. I'm not sure what the exact supply numbers and demand numbers will look like, even if we play catch up on the EVs, on the internal combustion engine side. Meaning, catch up is the wrong term, but if it stays higher for longer, love that term by the way, higher for longer, then we will need to figure out that supply gap as well. So perfect case for palladium in particular, because that has been really punished. Russia plays a big role in it. South Africa, you mentioned. There are some aspects that are extremely bullish for it, but you got to make sure that your case is solid when you look at those metals and whether you agree with those cases. And I don't have those cases. I haven't done my homework on it, but I tend to agree with Rick Rule. I think there is an opportunity there. But since there are not a lot of miners or explorers looking at it, I tend to not look at it. I tend to dismiss it. It's too small of a market for me to look and focus at. So that's one of the reasons I don't look really at lithium and the rare earth metals as well, because it's too complicated. Like there's too many too many factors, which are mostly on the processing side, which has nothing to do with mining. So I'm trying to stay away.
Right, fair enough. Yeah, and just to be clear, I don't know if Rick is definitely bullish on platinum and palladium right now. I just mean his philosophy about being guided by what's unloved. One of the things I want to get your thoughts on as well is the German economy. Obviously, platinum and palladium historically quite influenced by that, given the nature of catalytic converter demand. For so many years, Germany's been dependent on cheap Russian oil, I guess, and cheap energy. And that business model's kind of crumbling now, given the nature of the war. What are your thoughts on the future of like the German economy and Europe in general, as we kind of enter this period of increased geopolitical fragmentation?
It's a very good question. I just pulled up an article from Reuters because I heard about it on the radio. I didn't see the news yet this morning, but the German Economic Institute expect GDP to contract again in 2024. I think that's all I need to say about this.
Yeah.
Right. We're duped. Like we have been duped. I personally think by our government. We've been duped into believing that we're saving the world by single-handedly shutting off nuclear reactors and increasing our power prices tenfold. It feels like the U.S. power price per kilowatt hour is 6-7 cents for a household. I'm paying 37 to 40 cents a kilowatt hour, which is an absolute joke. Now think what the industry does and has to pay. I'm sure they're not paying 40 cents. Don't get me wrong, but how can you stay competitive in that environment? I was personally hoping that the Volkswagen debacle that's currently unfolding in front of our eyes is waking people up. Maybe it is. The Green Party leadership just took their hats and said, okay, we're out of here, because they're responsible for that debacle we're in, because I think it's absolutely mind-blowing what they have done to the German economy just over the last 4 years. Couldn't believe it. It's tough to believe how much you can tank an economy in such a short period of time with ideological goals that are not pragmatic. Don't get me wrong, I'm all for saving the planet and I want to have my kids and grandkids live in a nice place. Like, I don't want to live in a dump and I want to have clean air. Don't get me wrong, but there are other ways to do that. And people need to be employed to actually afford that climate change initiative as well. And if Volkswagen has to let go 30,000 people because they completely were misguided by EV sales, for example, and they're definitely not meeting their sales targets on the EV side, then there's a problem. Something is definitely amiss. Like, if charging your EV pretty much costs as much as filling up your gas car right now, then you've lost. Then you don't have an advantage, right? And all the tax subsidies that the governments globally actually gave for purchasing EVs have subsided. We're not giving out any more 5,000 euro checks or so if you buy an EV. So it doesn't make any economic sense anymore, because you can buy a car that uses maybe 6 liters, 5 liters, depends on the size of the car, per 100 kilometers. What is that right now? That's €1.60 a liter right now, times 5. That's €9. Imagine how much, like, what the price difference needs to be.
Right.
Personally, I think when I lived in Vancouver, I was looking into buying a smart electric car. And it was, when was that? 21, 22. So of course the used car prices were ridiculous. But the EV version of a smart car, I think, was like $5,000 or $6,000 over the gas powered one. Can you, like, just that alone tells you that there's definitely something off, and it doesn't make any sense. Do you know how much gas you have to burn to make that up, and you still haven't paid for the power that you put in the car, right?
Correct.
So there's something amiss, and we're seeing that throughout Germany. It's very frustrating. I was just out with a friend earlier today for a run, and we talked about it. He's like, I actually feel embarrassed to talk about it. Like, Germany, like, we're the idiots of the planet right now, it feels like, because we let it happen. I think that's why we're seeing a lot of, especially in the East, there are regional elections happening right now. There's a massive swing to the right, maybe even too far to the right. That's for other people to discuss. That's not my field of expertise. But people are angry with what is happening and what they're seeing. It doesn't make sense. Germany is not competitive anymore. Another interesting tidbit I heard on the news, we've dropped a rank in the, what was it called? It was like the innovation ranking, global innovation ranking or something like that was called. And we got surpassed now by South Korea. We're 9th now. I think we were way higher. Like Sweden, Switzerland, and I forgot the third one. We're ranking 1, 2, and 3. But we're losing on all accounts. Like, our German train system is completely messed up. It's horrible. Like, 65% of the trains don't run on, or only 65% of the trains run on time. Lufthansa is not a first-class product anymore. Like, we're definitely not a 5-star airline. I'm not sure where they get the ranking from, and I've flown it a lot over the last 12 months, okay? It's not a 5-star airline anymore. So Germany's going to hell in a handbasket quickly, and I don't understand why we could how that happened.
Yeah, no, Kai, I can honestly say the same for the UK. One of the reasons why I moved over here to the Isle of Man is just, I think it's just the general decline of the West and Europe in particular. I mean, obviously Brexit, we've left, and I think we'll save that conversation for another day. But you look at what's going on in the political situation. You look at the economy situation, like real wages in the UK have been stagnant since 2008. It's like
40% of your pubs are closing. I think that's the real shocker.
this.
So,
I mean, even when I was in the US, in Spokane, a couple of weeks ago, we went to the mall, and it was like a ghost town.
oh yeah, I've been to that mall. That's and that area around it is really sketchy.
Yeah, and this is what I guess Naomi Prince talks about, which is this permanent distortion between the real economy and the financial economy. On the boots on the ground situation in a lot of these countries, it feels like a recession. It feels like there's real economic weakness, but the data isn't necessarily showing that, and that's because it's all fudged, or a lot of it is. But anyway, don't let me go on a rant.
Well, you got me all riled up here as well, because I think we focused on the wrong ideologies, and we've completely been misguided and completely lost track of what the main goal is here. It's wealth prosperity for everybody,
Yeah.
and that doesn't happen the way we're approaching this topic, right? That's as simple as that, and it's so sad to see that the decline, not just in Germany but globally. But here in Germany, at least, we need a wake-up call. I was hoping the Volkswagen situation is it, but people don't seem to listen. So maybe people are not suffering enough yet.
Maybe. No, that's a good question. And I guess one time they can enjoy Germany is obviously your conference.
Absolutely.
Irrespective of what's going on. You've obviously got in November the Gold Deutschmesse. Please let us know when that is, the dates, and what we can expect when you put it on.
Yeah, Ted, I really appreciate the opportunity. Thanks for letting me bring that up here. So Deutsche Goldmesse, German Gold Show, happening November 21st and 22nd. We'll have about 20-ish companies, 6 keynote speakers, 2 fantastic panels join us in Frankfurt. We expect about 250 people attending. It's a boutique event, don't get me wrong, but I think it's a really high-quality event. Company investor ratio is about 1 to 9, which is absolutely phenomenal and unheard of. Show me any other conference that can deliver that type of value for the companies. And there's a lot of good content coming out of that conference. We'll have Matthew Piepenburg, Henrik Sieberg, Clem Chambers, and we'll just confirmed Incomet as well. They're really good at explaining how to invest in junior exploration and mining companies. So we'll have a fantastic package. The whole mission of the conference is educate and meet, right? Education and meetings and networking. We offer one-on-one meetings with the CEOs, networking over 2 days. Like, it's really important for us. I don't just say it, we really actually emphasize it. And of course, companies get to present to the investors as well. So it's a really comprehensive event happening in downtown Frankfurt, free to register for proper investors. And by proper, I don't mean accredited. You can be a high net worth retail investor or just a retail investor. It is an investment conference, so it's not a retail show where you walk the floor, grab a couple pens and move on. So you need to be an investor in the space, and we'd love to have you. We'd love to meet you and introduce you to the space, educate you, maybe even give you a couple pointers if you ask us. Of course, we don't give investment advice, but we can point you in some interesting directions.
Yeah, sounds great, and I'd love to be there. I'll definitely make a point of doing that. I think we'll park it there for today, Kai. I think we've covered a lot of bases. Do you want to just let us know where we can find your details? I know you're Junior Mining Guy on Twitter. Is that correct?
Absolutely. So it's at JR Mining Guy on X. You got to be correct here.
Yeah.
They've changed the name. I don't know whenever, but I don't think we'll ever get rid of the Twitter. Sorfinancial.com is the main website. Deutsche Goldmesse or GermanGoldShow.com is the one for the conference. And then follow us on YouTube, of course, as well. We put out interviews 3 times a week. YouTube.com/Sorfinancial.
Awesome. Brilliant. Okay. Thank you, Kai, for coming on, and hope to have you on again soon.
Thanks for the opportunity. Appreciate it, Ted.